Okay, let's begin with the first spot FX trading strategy. That's the instant pip profit. Now this technique works with all time frames, which is 5 minute, 15 minute, 1 hour daily chart. But I prefer doing it on the 5 minute and the 15 minute chart, and I prefer doing it on crosses like Aussie dollar, Japanese yen, New Zealand dollar, Japanese yen, Euro, Swiss franc, Aussie Sing, Canadian Swiss franc, Euro, Japanese yen, and so on. Now let's look at buying to enter. Now when you buy to enter, you make sure it is an uptrend. The most important indicator in instant pip profit is the Bollinger Band. What you want to see is the currency pair to hit or come very close to hitting the lower Bollinger. So you can see over here, this line below is the lower Bollinger Band, and this line above is the upper Bollinger Band. You want to see the currency hitting the lower Bollinger Band, which is this black candle. Next, you wait for the next candle to make sure it is a white candle, which indicates bullishness. So you see over here, this is the second candle, which is the next candle, and you want to see this white, which indicates that from here the currency is going to go up. Thereafter, you want to make sure RSI and CCI should go up, but this is optional. So I'll show you this example slightly later. Next, stochastics should be at bottom. So this is the stochastics, and this should be at the bottom, which is at 20 levels. And parabolic SAR should preferably be below price. So if you look at the parabolic SAR, which is these dots, they should be below the price, and you can see it is below the price. So this is the price, this is the parabolic SAR, so it's below the price. Now, you will go long, which means you will buy at the open of the third candle. So you buy over here, which is the third candle. So this becomes the first, this is the second, which is a white candle, indicates bullishness, and you buy over here, which is the third candle. Subsequently, you will exit when it reaches the upper Bollinger. So in this case, you exit over here, which is the upper Bollinger. This is where you exit. Now you will place a stop at the first candle low or 100 pips below the buy entry price, whichever is lower. So this is the first candle. You place a stop over here, which is the low, or 100 pips below your buy. So you buy over here at, let's say, 94.25. So 100 pips below this is 93.25. That's where you place your stop loss. Now let's look at an example with RSI and CCI. So again, this candle is at the lower Bollinger Band. The next candle is a white candle. Stochastics is at the bottom, which is 20, as you can see over here, and it's going up. RSI is going up, CCI is going up, and the parabolic dot, which was above, has now gone below. So you enter over here on the third candle. Then it reaches the top of the Bollinger Band. That's when you exit. Okay, now let's look at the sell to enter for the downtrend. So again, this time you want to make sure the currency pair has hit or come very close to hitting the upper Bollinger. So in this case over here, the candlestick is here on top of the Bollinger. The line above this is the upper Bollinger. The line below over here is the lower Bollinger. So the currency has hit or come very close to hitting the upper Bollinger, this white candle. Next, you wait for the next candle to make sure it is a black candle, which indicates bearishness. So you see over here, this candle is a black candle, and it indicates bearishness. So it confirms our second criteria. Now RSI and CCI should go down. Now this is optional, so we'll look at this slightly later. Stochastics should be at top. So if you see over here, this stochastics, and it is right now at the top. When I say top, means 80 levels. Parabolic should preferably be above price. If you look at the parabolic dots, which is these dots, It's above the price. And if so, go short. That means sell at the open of the third candle. So this becomes the third candle. This is where you sell to enter. So parabolic is above, you sell to enter over here. And you exit when it reaches the lower Bollinger. So you notice it has touched down, and it has hit the lower Bollinger. So you enter over here, you exit over here. Now later you will learn my techniques, especially my pip maximizer technique. You will learn that when the price goes below the moving average, so this center line that you see is the moving average. The price goes below moving average and the parabolic is above and the moving average is also going down. It's a confirmation of downtrend, and that is why I choose to exit only half over here and not my entire position. And then I exited the second half over here when the parabolic dot from above went below, which indicates a change of trend from downtrend to uptrend. Now more of this you will learn in the pip maximizer technique. Let's take one more example here. This candle is at the top of the Bollinger Band. Stochastics is on top, going down. As you can see here, stochastics. RSI is going down. CCI is going down. Now, the next candle should be a black candle, so you can see the black candle. You want the parabolic to be above the price, so you can see it's above the price. So this is where you sell on the third candle. And this is where you exit at the lower Bollinger Band. Now the initial stop loss is placed at the first candle high or 100 pips above your sell price entry, whichever is higher. So this is your first candle, this is your second, this is your third. So you place a stop loss here or 100 pips above your sell entry price. So our sell entry price is 1.6660. So 100 pips above 1.6660 is 1.6760. So that becomes our stop loss. That brings us to the end of the instant pip profit technique.